Hello, everyone. It's Michael Jaco with Unleashing Intuition Secrets. So we're going to talk about silver and gold today. Dr. Kirk Elliott should be joining us shortly. First of all, let me show you long-term. This is from the Bubble report. Dr. Kirk Elliott recommended this report. And in this report, as you guys can see, if you did the last secular bull market in gold, now we'll talk about gold first, you would see that from 2001 to 2011, about a 10-year time frame, it delivered a 630% return. All right, unbelievable return. So you're like, wow, that's a lot. But let's look at silver. Now, silver during the same time frame rose 1,118%. So amazing, returns like we've been talking about for quite some time. Just back in 2000, what was it? When I think it was about 22, 23, somewhere around that time frame, when silver is around 17, we're jumping up and down, buy it. So it's up like 3x, pretty much close to 3x. And it was over 3x when silver hit 54 recently. So yeah, amazing things are happening with the silver and gold market, but especially silver. What are your thoughts so far?
Well, so this last week, Michael, has been a whirlwind, right? So silver gets 54 because London's running out. The lease rates are crazy high, and it's costing refineries 15 cents and dealers, for that matter, 15 cents an ounce per day to store the stuff, right? So it's like, why would any refinery keep any inventory at all, right? Because they're losing their profits like fast. So especially when they operate on a 2 to 3% margin to begin with, it's like, what? That's all that they make. And they're losing 5 times that in one day just by storing it. So this has caused even more of a supply crunch. So when silver hit 54 and it came down like pretty stoutly, like it got down into sub 48. I mean, that's $6 correction in 5 days. I had clients, okay, 2 types of clients, right? Some of them were saying, Kirk, God answered my prayers. The price came down for me to buy. And I said, okay, you got to explain to the other clients that bought in at 54 that are really mad. And it's like, but no reason to be mad, right? Because a correction like this is healthy. It's actually needed. I'm glad that it happened. Now, what we don't know, Michael, what you don't know, what I don't know, what nobody knows is, when is that going to take place, right? Was it going to happen when silver hit 60 and it comes down to 55, or 65 and it comes down to 58? It happened at 54, came down to less than 48. Well, it was there for a day, because then the next day silver went up to over 48.18. Now it's at like 48.5. I mean, it is moving. So everything was overbought. Gold, silver, they were overbought because of the stratospheric rise that we've seen. I mean, when silver was on its run to $54 an ounce, it was up 19% in 2 weeks, right? So to come down a little bit, and people think, Kirk, did you miss it? Did you miss it? Is it like going to come down now? It's like, no. The fundamentals of the market didn't change. London still has very little supply. The lease rates are still high. We still have inflationary pressures all over the world. And guess what caused it? I think one of the sparks that caused it to actually hit that 47 and upper 47s, and now it's moving in the other direction, was the Fed. So the Fed decided, we're going to lower interest rates 1/4 point. Why? Because Trump has been begging for this forever, to get more rate reductions, because it's going to grow the economy. Guess what moves when rates come down? Gold and silver. They do really well in declining interest rates. So now it's moving up, and it's moving up handsomely. So I think that time when the people that were praying for a price reduction and they got it, it's like, I think those days are very numbered. Like, yeah. I think we're going to test 50 again in pretty short order. Now, If we didn't, I would not be sad, because it's healthy to have a consolidation period. Like we've talked about before, when you and I talk about some technical analysis, right? It's like whenever you consolidate, it builds the new foundation for the next up leg to do really, really well. So our consolidation here might be a 5-day consolidation. Maybe it lasts a week, maybe it lasts 2 weeks. I don't know. But these markets are so resilient right now. It's mind-boggling. It's like a buoy out in the ocean. I mean, you spend a ton of time in the ocean, right? You've got this buoy out there. It's really hard to get it to go down and sink. It's like, it's almost impossible, right? You can't pull on the chain and pull that buoy down with your own muscles. It's going to go back up. That's, if we're to personify these markets, there's so much bullish pressure underneath them because of everything that's happening in the world.
Yeah.
It's like, I still am holding fast to my predictions that I've made over the year. Silver will be 67 to 75 by the end of the year. I think it's going to hit 120 to 140 by late spring, early summer.
I agree.
Because of these fundamental forces that cause the chart to look like the chart. You know, we don't want to fixate on the chart when there's always a reason why the chart looks like the chart. And that is interest rate policy, it's debt, it's geopolitical conflict, it's everything, it's supply and demand. Yes. Ultimately, it's supply and demand, and we have tons of demand, very little supply. So we have to ask ourselves this question: why did it come down? Well, probably, if you look at volume charts, it doesn't appear that it was actually individual investors. It was like a small number of players with large, massive amounts of volume that put selling pressure on the market. So that would indicate one of probably two things. Number one, some big entity, whether it's a hedge fund or a big, massive bank, like BOA or something like that, like a big one, says, we better actually unwind some of our short positions, because they know what we're talking about. These markets are like the buoy. They're going to go up. And the more they go up, the more money they lose because they have short positions. Another plausible explanation would be a lot of these institutional holders hold other things like bonds. It's like, oh, these hedge funds, they have bonds. Bonds are stinking it up bad. They're just not doing good. So if you have to report to your shareholders on quarterly meetings, you better offset your losses with something that has a gain to actually blend your total return. Well, what has gains? Like you were just talking about over the last few years, I mean, silver up 1,000%, gold up 600. Well, just this year alone, gold up over 60%, silver up over 80%. Okay, not much in the world that has better gains than that. No. So why not sell off a portion of them? To me, this is just one of those things that happens. Selling pressure on the market caused the price to come down temporarily, but it's not a trend change. It's absolutely not a trend change. And what the Fed just did by lowering interest rates on Wednesday, it's like, okay, I expect this to go up and go up and to go up. Now, nothing's going to go straight up. Nothing is going to go straight down. So the next time we get a pullback, don't freak out over it. It's healthy, because you're in any bull market, you're going to have 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's what we're seeing in the markets.
So I've talked to a lot of people, over the last several years that we've been working together, and a lot of them are in investment funds. And I've told them, please get into gold and silver. And silver is the ideal thing. So they have done it within their funds. Now, I talked to someone just recently, and they said their fund was charging them a ridiculous amount when they exit. Because we've talked about this, how you charge up front, and then whatever your profits are yours from that point on. I talked to one couple, and they were all happy because they listened. And I said, well, did you go with Dr. Kirk Elliott? And they're like, no, we stay with our fund because they had silver, and they're getting charged 20%.
I mean, that ongoing, or when they liquidate.
When they get ready to exit, they're going to get charged 3%.
Yeah. So I just got a call earlier in the week from a client who bought metals at some other firm.
Yeah.
And they called and they said, "Hey, Kirk, when I liquidate metals from this firm," I just called them, "is 28% commission when you sell high?" It's like, what? Are you kidding? It's like, dude, we're zero when you liquidate. Zero. 28% is highway robbery. So again, we have to ask ourselves these questions. Why do they do that? Well, A, they don't want people to sell,
right? Because
they don't have the liquidity. So here's what fundamentally makes us different than pretty much almost every other firm. We at KEPM do not sell out of an inventory. We don't carry an inventory. We deal directly with the depository, right? So firms that sell collectibles, commemoratives, anything, and they sell out of their own inventory, what we've seen over the last week is gold and silver both were at all-time highs, right? So people with a short-term vision for the future are liquidating. They're locking in their profits. Now, these firms have much more people liquidating, much more people selling than they have people buying. Well, at some point, if you're operating out of your own inventory, you're using your own capital. If you've got more people wanting to redeem rather than to buy, you're going to run out of money. So they're going to come up with some plan to say, okay, let's entice people not to sell back in. How about we slap a 20% commission on it, right? So imagine, we're not even at the peak of a market. Imagine what's going to happen when silver is at a peak and it's in the hundreds of dollars an ounce. And everybody knows, hey, this market is out of steam. We're locking in our profits. We're going to sell. Some of these firms would probably rather just go bankrupt because they're not going to have the capital. See, this is where it's really important that you do deal with bullion only. You do it with an exchange because it's an industrial commodity. It's used for manufacturing. When we want to sell, we literally press a button at the depository. They buy it because it goes onto the exchange. It goes out to the Sonys and the Lockheed Martins of the world, who ultimately are going to buy it and have exchange for physical contracts that they need it for manufacturing. They're not going to need Trump coins. They're not going to need even silver eagles. They're not going to need any of that stuff, because all that the depositories are going to do is take what comes in, melt it down to make it into a bar to go to the manufacturers. See, these commemoratives, even if they have a picture of an amazing patriot that we love.
Yes.
On this, I mean, I love Trump. I love a lot of the other patriot type people that have pictures on these commemorative coins. They are commemorative coins. They're limited issue that was made to sell to somebody who loves this person. I love those people. I would never buy their coins because there's no outlet for them, right? And so there's better ways to support somebody that you love that's a patriot. Just donate to them, right? It's like,
good point.
Don't buy their coins because there's no outlet. See, this is where
I've seen that in some of these coin dealers are saying that they're not buying junk silver, because a lot of people, I saw it in our chat all the time, buy junk silver. I'm like, I don't know. Now all of these coin dealers are not taking junk because the refiners are overwhelmed. 7 days a week they're refining. People are bringing in silver trays and silver sets and all kind of stuff, and they're refining all this stuff. They don't want the junk silver anymore. Wow, you're stuck with it.
You're stuck with it.
Sell it. You're going to sell at a massive discount compared to a real ounce of silver.
I mean, this is the problem, and people will listen to all these different stories. It's like, boy, we sure could use dimes and quarters in a barter world. It's like, sure, they're great. However, what if we don't get to that point? What if you're just going to liquidate to lock in profits? Or what if a tornado blows through town and you have to fix your roof, you don't have the insurance deductible, and you have to sell some of your silver to pay for that? Well, if you have something that people don't want, well, then you're stuck. So I would rather people barter with a 1 ounce silver round that's bullion.
Right.
That's not something like that, right? So there's so many people use stories to
That's with
sell.
you. It's like almost instantaneous. You sell, and then you get the money. It's so easy.
It's easy. I mean, outside of an IRA, it's literally usually the next day.
Wow.
In an IRA, we still liquidate, like press the button, but you have to fill out a distribution form. That might take a few days, right? So in an IRA, let's say 5 days and you'll have your funds. Outside of an IRA, 1 day you'll have your funds.
Incredible.
Rather than calling a dealer saying, I want to liquidate all these Australian sea life coins that I got and all these Canadian wildlife, whatever.
Kookaburra coins, from Australia.
I mean, it's like, okay, well, we'll call you back and get you a price. Then they call back a couple days later, and it's a horrible price because they called a bunch of other people and didn't want it. So now they got to melt it down. And so somebody says, okay, we're losing our shirt, but okay, why is it that silver and gold doubled and I'm up 2%? What is that? Well, at least you're at a profit. See, that was the goal. We wanted to sell you this so you could get to a profit, and you're at a profit. It's like, yeah, it should have doubled, not up 2% or something dumb. So literally, this is how they're operating. But it will get to a point, Michael, that they will either say, we're not buying anything back. You got to go somewhere else, because they will run out of money. When they operate out of their own inventory, this is why I think in God's wisdom, we set up our firm the way that we did a long, long, long time ago. And I don't carry an inventory for that particular reason, right? Because it squeezes everybody at some point. We haven't gotten to that point of squeezing yet. We as a firm probably have 99% purchases and 1% liquidations. People need to liquidate, they need money, whatever. Right. But so we never have that issue. We wouldn't have that issue if we operated that way either. We got more purchases than we have sales. At some point in the market, in a world where there's no guarantees, here's my guarantee. At the top of a market, you're going to have more liquidations than you have purchases. You better be out of your position before that point, because then I don't think you're going to get it. You're going to have to go to another firm, and they're going to say, we're in the same boat. Go to another firm. Ultimately, you'll come to me and say, Kurt, can you buy this stuff back? It's, we'll sell it to the depository. When the depository buys stuff like that back, it's melt. They don't want it. They don't care whose picture is on it. They actually have to melt it down to make it into a coin or a bar. That's way less than spot price. Way less. So don't buy those things. Just buy bullion, where you're never going to get that issue, because it's already refined into the final format that people would need, right? So anyhow, I know I'm going off on a rabbit trail, but this is the makeup.
This is very important, because I think people really need to understand that you are the best deal in town. I want everybody to understand that. And wherever you're invested, you need to look really closely and don't let them, con you into staying if they're going to charge you like on the backside of your investment. Because if you roll over, you get your 59.5, and some of the people were telling me they started rolling over their IRAs into silver, and then they're going to get charged incredible amounts. Now, I said 20, and there's other fees involved as well. So I'm like, oh my God. Yeah. I don't know if they can move move over to you still, but they need to contact you and find out. Now in the world, we talk about, how the world is a crazy place right now. Left wing leaders flee from Tanzania. So Tanzania is gone. It's burning. Down in Rio de Janeiro, there's an open war going on. Hundreds of people are dead now, where the government is going in and raiding the drug cartels. We are very close to going into Venezuela. It's right around the corner. All of these things are going to drive you think silver is like expensive right now? Oh, it went down. It's a buying opportunity. Hello. It's going to explode upwards again. And like we're talking about, 65, 75, 85 by the end of the year, maybe, and 150 in the spring of next year. Those are incredible returns. Now in the bubble report, he's talking about how we're in a secular bear or bull market. I think we're 2 years into it. They usually run about 10 years.
Yeah.
So long term, let me play this one video real quick. And this is very staggering how most people are in the S&P at more than any time in history.
Global markets investor, U.S. household wealth has never been more dependent on the S&P 500 performance. U.S. households hold a massive 80% of their assets in equities, an all-time high. The share is even higher than at the dot-com era peak. We're going to talk more about the dot-com era in just a minute. Diversification is nearly non-existent among U.S. households.
Non-existent. Come on. What have we been saying for a while now? Guys, you got to get into some gold and silver. Get in it with Dr. Kirk Elliott, please, or whatever. But you're going to get burned. We've been saying the stock market's going to crash. I think we're going to see a 1929 level stock market crash because we've never seen a bubble this big in history.
Yeah.
It still has some way to go, I believe. It may pull back a little bit like it's doing right now and then take off again, which I think is highly likely, just like the dot-com bust before. We have the same patterning that's happening. It's going to explode upwards. Gold and silver will go up with it. Crypto is going to go up with it. Everything bubble, right? And then they're going to pop. It's the last thing. Housing's crashing everywhere. The world is a crazy place right now, and you got to get into things that are safe, and that's silver. Silver is the safest thing you can be invested in, and it's going to have the highest return of anything. Nothing is touching silver right now, and it's going to be even better going forward in the future. So crazy.
Yeah, even better. I mean, we've talked a lot about LBMA, to kind of wrap up this conversation with a bow. LBMA is living on borrowed time. I mean, they're living on borrowed time. Why? Because they've leased out all their silver, which is why they have no inventory left. You know what they have to do now? They've got to return it because people are wanting exchange for physicals. It's like, wait a second, we leased it out. We don't have it. So now that they want it, then they've already leased it out. What do they have to do? They have to go buy physical silver on the market to fulfill those contracts. Big problem in that. There is no silver in London. Now, COMEX, China, India have silver. They're not releasing it. China might be a little more nefarious. They want to destroy the Western financial system, and by not releasing silver into London so they can fulfill contracts, they bankrupt London. Okay, maybe that's why. But others are going to act on instant arbitrage. London is going to have to jack up prices a lot to get metals back in, which could ultimately bankrupt them anyways. But if they jack up the spot price $4, $5, $6 premium over futures prices, ultimately people that have us, COMEX, India might say, yeah, we have tens of millions of ounces, and at $5 to $6 premium instantly, bought silver in India, sell it in London, that's instant profit. Ultimately, they'll get to that point. But that one mechanism might destroy London and the LBMA. I'm not talking about London, the city, I'm talking about LBMA. And you know what? The power shift moves to Shanghai and the Shanghai Gold Exchange. Maybe that's what they want. In the meantime, this is going to have some legs, Michael. Yep. This is going to have some legs. This isn't going to be over anytime soon. Allocate now. Allocate as much as you feel comfortable with, especially when we got a price dip over the last 5 days. Take advantage of it and allocate as quick as you can.
Absolutely. And of course, KEPM.com. Tell them Jaco sent you, and contact information. Drop down the little hamburger there, and there's the phone number 720-605-3900. If you're with another firm, I would still call Dr. Kirk Elliott and find out maybe the particulars of maybe moving some of your investment into something that's safer. And it's going to be very, very beneficial long-term, guys. Like I said, stock market will crash 80, 90%, and it'll take decades for it to come back. Do you have decades to wait for it to come back? And in the meantime, your investment could be accelerating to unbelievable heights. This is an investment profitability
You got it.
Yeah, it's so amazing that I can't even get it out, that you don't want to miss. I'm so excited about it. So I'm excited about it. I've been invested for a long time with Dr. Kirk Elliott. I hope you guys do too, and we'll see you guys next time. Thanks a lot.